Over 1 million households in Australia are on the brink. In this video, I'm going to talk about the skyrocketing mortgage stress and how this is going to affect property prices. So if you own or are looking to purchase your next property, you need to understand what is happening in the market right now and how this data is going to affect you. If this video brings you value, please like for the whole of the YouTube algorithm. And comment your thoughts below. How do you think this will affect the property market? And subscribe for more awesome content on property, personal finance, savings and investing. Let's get into the video. Okay, so the data just came out for the month of June for mortgage stress from Digital Finance Analytics, Martin North, and shout out to him, he's got great content. And it's pretty shocking and devastating, the numbers that have come out. For the month of June, 1.47 million households are now in mortgage stress. Last year, I think it was only 1 million, and 100,000 loans are at risk of default. And that makes up 39.1% of the property market is in stress, and that's up from 37% last month. That and mortgage stress means simply people's pay isn't enough to cover all their expenses in their mortgage. Nearly 500,000 home loans have been deferred with mortgage holidays or payment deferrals, adding up to 175 billion. Now, the most affected are young couples, with 69.2% are in mortgage stress that recently brought at the peak. And a lot of these new developments where, they probably borrowed the max amount that they can borrow, which is very bad idea. You should never borrow the max that the banks let you to borrow. And the least affected are the young affluent households, with only 14.4% are in mortgage stress. A survey has been done, and up to 12% of property investors are thinking of selling their property right now. So make sure you watch the video till the end, where I'll give you some tips on how you can use this situation to potentially get your next property cheaper, and my thoughts on what will happen to the market. Okay, so let's break it down state by state to see how they're doing. Now, the most affected has been Tasmania, with over 49% of households are in mortgage stress. That is because of the huge increase in property prices of late, and also the Tasmania economy relies heavily on travel and tourism, which has just been shut down. It's been completely shut down, so many people would have lost their jobs and lost their income, which is devastating. Coming up next is the Northern Territory, with 42% of people in mortgage stress. But coming up on its heels, and what has been very concerning, is the continued rise in mortgage stress in Victoria. Victoria is now over 41% of households are in mortgage stress, and this is really going to affect property prices in Victoria. And now with this second lockdown, auction clearance rates just came out for the weekend, and Melbourne auction clearance rate was only 44%, down from last year, where around this time last year was 77%. So it's going to have a big impact on property prices in Victoria. Okay, now the other states, WA coming in at 40.4%, South Australia at 39.8%, and ACT at 38.1%. Queensland doing pretty well at 36.7%, and New South Wales is actually doing the best, coming in at 36.2% of households are in mortgage stress. But now something that's pretty concerning in New South Wales, there is rising cases, there's been more restrictions imposed, so this is going to have an impact, and we'll have to monitor the situation in New South Wales. Now let's get into the top 10 postcodes that are most affected. So if you live in this area, you can expect that in the future there's going to be more distressed properties coming on the market, and if you're living in one of these areas, now's probably not the time to buy. It's probably best to wait till early to mid next year, where you may be able to get some deals and get some discounts. Let's see which properties are doing worst. Okay, coming in at number 1, Ballarat 3350. So yeah, not looking good at Ballarat. There's been a huge increase in property prices in Ballarat. I think it's up around 25% over the past year. So people probably got in, bought properties at the peak thinking they're going to keep rising, even if, they thought maybe can't afford it, but, the prices will go up and then I can sell it. Well, unfortunately, it's not looking good for Ballarat and regional Victoria. Runner-up is Curtin 6030, Melbourne 3037, Melbourne 3977, Melbourne 3030, Melbourne 3810, and Melbourne again 3029. Stirling 6029, Sydney 2567, Central Tablelands, or Tablelands, I think that's how you pronounce it, 2 800. And the highest postcodes in stress in Brisbane is 4034, followed by Mackay 4740. And a bonus for you in South Australia, 5108 is the highest postcode in stress. Some new data has come out for rental stress, and rental stress is actually higher than mortgage stress. And if you don't think this is going to affect property prices, think again, because when property investors go to purchase a property, the banks will ask how much rent it's getting. And say, for example, if you want to buy a $500,000 house with 20% down and you're only getting $200 a week rent, that's not going to help. Where if you're getting $400 a week rent, yeah, the bank may give you the loan. So rents do affect property prices because it affects the yield and it affects how much the investor can borrow to purchase that. Higher rents, investors can borrow more money and bid up prices. The number of households in rental stress in Australia hit 1.7 million. That's right, 1.7 million are in rental stress, followed by 1.4 million in mortgage stress. That's over 3 million households are in stress right now. And it's definitely not looking good. The states that have been most affected, again, is Tasmania, with 56.3% of rental properties are in rental stress, followed by Victoria, where over 40% are in rental stress. The states doing the best with rental stress, Queensland is doing pretty well, coming in at 36.8%, and New South Wales 37.9%. But I expect in New South Wales to increase because of the restrictions put in place, and we'll just have to monitor what's going on in Queensland. With all this information, we can expect more distressed properties to come on the market, but luckily the PM and Treasurer have announced that JobKeeper will be extended at least till Christmas, but it'll be more targeted. So those that, were only working 1 day a week before, only making, $500, $1,000 a fortnight, but now they've been getting $1,500 a fortnight. Well, it's over for them. They're just going to be getting a more targeted payment relative to what they were earning before. But there may be more income support for those that lost their jobs on high income. Also, the banks have announced an additional 4 months loan repayment deferrals for those that need it. But they're also in talks with their customers that just won't be able to pay it anytime soon, where selling their property is becoming a more likely option, which will have an effect on property prices, with more distressed properties coming on the market and people wanting to sell quickly. Now, if you have some equity in your property right now, some people may think, okay, I better sell it now, because if I wait till mid next year, there may be a whole bunch of distressed properties come on the market at once. And you know what they say, if you're going to panic first. So how long can they just keep kicking the can down the road? 1 year, 2 years, who knows? Maybe they'll just bring in something called universal basic income, where they just pay people not to work because it has too much of an effect on the economy if they cut off these supports. So now what you've all been waiting for. Okay, all this data, all these numbers, yeah, whatever. So how's this going to affect the bottom line? How's this going to affect my home price? Or is it going to crash prices and I can finally buy my dream home? Well, it is going to have an impact on property prices. Even with JobKeeper extended, at the end of the day, those people aren't going to be able to buy properties. If they were thinking about buying, they can no longer buy now because the banks won't borrow to lend to someone on JobKeeper. And unemployment is rising. Unemployment is now at 13.3%, and underemployment is up all the way, with Roy Morgan stats, is up all the way at 24.5%. So nearly a quarter of the workforce is either unemployed or underemployed. So this is going to affect property prices because you don't have a job, you can't get a loan, and it's not location. Yes, this does have a factor, but it's also more about lending, easy lending, low interest rates that affect property prices. So if you're thinking of buying, this is not financial advice, I don't know your personal situation, but what I would recommend is don't buy now. There's too much risk. The risk to reward ratio, there's not much chance of property prices rising anytime soon. Yes, there may be some outlying suburbs, there may be some outlying properties, some unique properties where people will pay a bit extra, and I'm sure the media will put this all over the news, saying people paying 100K over reserve, but these are few and far between. More broadly, property prices are going to decline. Next month, I'll bring out an update of the property price falls. So what you should probably do is start putting yourself in a good position to take advantage of the current downturn next year. Start paying off all your high interest debt, start an emergency fund, and start saving up a good deposit for next year. So if you are in one of those stressed suburbs and property prices drop significantly, you may be able to finally buy that property you've always been wanting to buy. And what I would do is next year, if you see the prices start to stabilize a bit, the falls are, they're still falling a little bit, but they're not falling so sharply. Then just start, smashing out offers, offer 20% below the asking price, and you'll probably find someone that's had enough, that just wants to get rid of their property. And even if you don't time it perfectly, because nobody can time the market, you would still have a margin of safety there where you've brought 20% below market value. Now, I could be wrong. The Reserve Bank of Australia could cut interest rates to the negative. The government could give out $50,000 grants for first home buyers or existing buyers. They might even be so desperate they might give $50K to investors. We just don't know what's going to happen. So guys, if this video brought you value, please like for the whole of the YouTube algorithm, and comment your thoughts below. How do you think this mortgage stress and rental stress data is going to affect the property market? And subscribe for more awesome content on personal finance, savings and investing. I'll see you in the next video.